Hey everybody, this is Ryan Mallory with a stock market bubble update. We're going to talk about a lot of things here. We had a crazy week. We had Bitcoin hitting $61,000 a coin. You had the Roblox IPO. We had the S&P 500, the Russell 2000, and the Nasdaq all rebounding. Plus you're getting the stimmy checks, another round of those. We're going to get into all of that and more. You had the S&P 500, it was up 2.6%. You had IWM, the Russell 2000 ETF, it tripled that at 7.3%, plus you had the Nasdaq up 2.2%, which actually lagged everything else in the market. But you also have the Dow, which I could care less about. I just mentioned it because that's what everybody cares about. I'll go ahead and give it a little bit of a mention. The Dow managed to close at all-time highs. There, I won't say anything else. But the other three indices, you had the Nasdaq lagging. And even though it was still up 2.2%, it was only lagging the S&P 500 by a little bit. It's still notable because when you have major market rallies, it's the tech and it's the Nasdaq that usually leads the way. Especially when the market starts to get into this bubble territory, like what we saw in 2000 and 2008, the Nasdaq's going to be leading the way. Now you're starting to see the money flowing out of tech and back into energy, financials, and industrials. Those three sectors are really what's rallying the market the most. You also have some strength in the materials, but those first three sectors are the ones that matter the most right now. You also have the 10-year yield. We're going to talk about that in just a little bit. That's causing havoc for the Nasdaq. That's making the borrowing costs for these tech companies much higher, which puts them at greater risk. So we're seeing the pullback. The Nasdaq managed to only rally 2 out of 5 days this week. But then on the other side, you have Bitcoin. It's creeping up to $61,000 a coin. That's crazy. I mean, it was just like at peak bubble a couple of years ago, we thought at $20,000. Now it's tripled that at $61,000. And a lot of people are piling into it. I'm getting texts, I'm getting emails, people saying, hey, look, I can't wait anymore. I've seen enough, I'm jumping in. And that's usually what happens with peak euphoria. That's usually what happens when you see people that cannot stand missing out, and that fear of missing out engulfs them and they end up putting way too much money into something that they should not be. Look, it happened with tulips. People were so crazy about the tulips back in the 1600s, they were paying hundreds and hundreds of dollars for tulips. That crashed. And now we're in this digital age where you got to start wondering with NFTs, with Bitcoin, are we on the brink of what could be another crash there as well? Possibly. I said this in the last video. I really am not here to make you feel good about your investments or your trades. Look at Bitcoin, okay? I know a lot of you guys are in it and a lot of you guys are excited, and I hope you guys make a ton of money off of it. I really do. I want you guys to do well with it. But in the end, what are you judging your Bitcoin value off of? It's still the US dollar. You're still saying, hey, I got $61,000 worth of Bitcoins. You're not there saying, hey, my US dollars are worth 1 Bitcoin. No, you're saying my Bitcoins are worth X amount of US dollars. And so ultimately, your goal with Bitcoin is to transfer it back into US dollars because that's what you're judging your wealth by, not by Bitcoin. And no, I really don't think that it's going to replace the US dollar. All of human history would tell you that no government has ever surrendered their government currency to the private sector. And they're certainly not going to do it this time with Bitcoin. There's huge headline risk associated with Bitcoin. You just haven't seen it yet. All the country has to do is ban it. All the country has to do is raise taxes incredibly. What if they did 100% tax on capital gains for Bitcoin? The whole thing would just completely crumble. Nobody would invest in it. So ultimately, the government has control over Bitcoin because they can tax it and they can regulate it. Now, that doesn't mean in the meantime you can't make money off of it. I want you to look at the long-term picture. It's not going to be replacing the US dollar anytime soon. But ride the wave while you can. If it continues to go higher and you're still in it, just make sure you're managing the risk along the way. Have an exit strategy. Now, a lot of you guys are hyped up about Roblox. For those of you who don't know what Roblox is, I had to ask my son what it is because he plays the video games all the time. And it's essentially a video game. It's a software that was created that allows people to create their own video games within a video game. And so this thing has gone public. It's worth about $38 billion right now. And regardless of the capitalization for the stock, I always say this about IPOs, give them like 4 to 6 months to settle down because more times than not, these new stocks that start trading, they're going to come way below their initial public offering price and they're going to go way below it. And that's going to give you a great opportunity 4 to 6 months down the road to get in at a good price. And if it doesn't, oh well, you just move on to another IPO if that's your jam. The hype's always extreme on that first day and sometimes for the first week. But if you look at Facebook, you look at Twitter, you look at Snow, you look at Rocket, what are they all doing? They traded well below their IPO 4 to 6 months down the road. So do the same for Roblox here. Be patient. Profits are made in the patience that you show in the stock market. Ultimately, you need some price history for Roblox, and all you have is a 5-minute chart that shows any kind of price history. And 5-minute charts, 1-minute charts, they're very unreliable for any kind of long-term trading or investing decisions. And when you look at the 5-minute chart, what do you see? You don't see anything. It's just sideways. Before I dive deep into the market indices, let me tell you real quick about my YouTube membership channel. Click join below and you're going to find out all sorts of great things that you can get in addition to these weekly videos I do. That includes multiple updates each week on the S&P 500, the Nasdaq, and the Russell. You're also going to get updates on all my watch lists multiple times each week, plus daily trade setups each and every morning. That's also going to include the most intriguing charts that I come across each and every day, as well as updates to all the FANG stocks. That's Facebook, Apple, Amazon, Netflix, Google, Tesla, and Microsoft. So check that out down below. Click the join button and sign up today. Now, with the S&P 500, what do you got? Well, you have the trend line off of the March lows. That's still holding. Yes, it was in jeopardy at the end of last week, showing a lot of weakness for about 3 weeks there. Now we have a 4-day rally on our hands that has taken price back up to the all-time highs. It's amazing how fast these dips get bought up. But if you really look at it, what has the S&P 500 done since late December? Not really that much. Go back to late December, it's essentially a choppy trading zone here. We really need to see price break out of this box and really extend its gains well beyond the current all-time highs. Going into next week too, I also want to make you guys aware of a potential double top. Now, in order for this double top to form, it's going to have to sell off next week. And if it does, it needs to take out the previous week's lows. Does that, you have a confirmed double top. But that's going to take a lot of work from the bears, and right now you're not seeing that. What has me the most concerned about the S&P 500 right now is this wedge off of those March lows. I keep highlighting this week after week, and it has yet to break. But it's getting precariously close to it, and it's yet to really push outside of that upper band. In order to put this whole wedge to rest, it needs to break out of that band. Now you also have a little bit of a channel here too, and maybe that's ultimately what it does. It breaks out of this bearish wedge and it pushes onto the upper channel band. If that does that, that makes it an incredibly healthy market going forward. But until then, we got to be careful that this bearish wedge does not confirm to the downside. Now, let's take a look at the Qs. Nasdaq 100. You have a head and shoulders pattern here. It has confirmed, hasn't really done anything to nullify this trading pattern, so we are very much not out of the woods here on the Nasdaq 100. And if you remember me telling you in previous videos, Nasdaq 100 is incredibly important to the S&P 500, less so for the Russell. That's why the Russell is able to see these massive gains while the Nasdaq and the S&P struggle relative to the Russell 2000. That's because Apple, Amazon, Netflix, Google, Microsoft, Tesla, all these big tech companies are in the Nasdaq 100. All these big tech companies are also in the S&P 500. And as long as they struggle to rally, so is the overall market. And a number of them did not rally this past week. Apple didn't rally, and that's $2 trillion of market cap right there. That's weighing on those two indices. If you cannot get the FANG stocks to rally, it's going to be very difficult for the S&P 500 or the Nasdaq to continue. And as a result, you're going to see a little bit more selling pressure on the market going forward. In fact, I'll say this, it amazes me that we have not seen more downside to this point with as much lag that there has been in the FANG stocks so far. But notice on the Qs here, you have a series of lower highs and lower lows. That's the mark of a downtrend. It's in the short term for right now. The lows from 2 weeks ago, if those things break, big problem for the stock market going forward. And you'll also see selling pressure in the S&P 500 too. This downtrend needs to end in the coming week ahead. You got the 50, you got the 20-day moving average. They're both weighing on top of it as well. And what's the culprit behind all this? It's the 10-year Treasury yield. This 10-year Treasury yield makes it very difficult for tech stocks to borrow money when it keeps going higher. And what do you notice about this chart? It's very dangerously at the recent highs. It's actually higher than what we saw during the COVID sell-off. And it's higher than anything that we saw 2 weeks ago when the market was selling off. It's at its highest mark in over a year. So yes, there is a lot to be concerned with because this thing is not showing any signs of slowing down. So if you don't get the sell-off in the 10-year, you're going to get it in the Nasdaq. Now the Russell 2000, it's amazing. And it's funny because up until about November of this past year, it didn't do all that much relative to the rest of the indices. In November, it just really took off like gangbusters. And now it just sits at its all-time highs, continuing to pile on gains day after day after day. It's on a 6-day rally right now as we speak. But notice the massive volume decline. While the market tends to do a decent job at rallying on low volume, it is selling off quite a bit. And it makes you wonder, okay, are we going to be able to maintain this momentum that we've seen over the last 6 days? Without the volume, it's not likely. And at the very least, you'll probably start seeing some days of choppiness start to come into this particular index. Because as you notice, it's extremely overbought. And the last time you got this overbought, that's when we started seeing a little bit of the choppiness and a little bit of the downward pressure on the Russell 2000. And speaking of that 10-year that we just discussed, if the 10-year yield starts to sell off, and the Nasdaq starts to rally, you're going to see even more pressure come onto the Russell 2000 because all that money is going to be flowing out of the Russell and back into the Nasdaq. One more thing I want you to be aware of when it comes to the Russell 2000, and that's the gaps on the chart. You're seeing a nice steady progression higher going back to the previous week's lows. But also in that rally, you're seeing a lot of gaps higher. These gaps tend to get filled over time. And right now there's two notable gaps that need to be closed. So be careful with that too. It may not happen next week or the week after that, but at some point it's going to close those gaps. I know for some of you guys, you'll say, hey Ryan, you're kind of a perma bear, you're kind of a Debbie Downer when you do these videos, and it's not that I am, okay? I really want the market to keep going higher next week. As we speak, I am long on this market. But I also look out for the potential road traps ahead, because I know that the money is not made in what you make in a bull market. It's really what you're able to keep when the bear markets come online. And when that happens, there's going to be a lot of people that lose a lot of money, and I'm not a fool to think that this rally that we're on can last forever. So yes, I do look for the exits at some point down the road, and I want you guys to be aware of it too. The last thing I want is for you to be part of this generation of traders that are going to be so burned by the stock market that they never come back to it, because there's going to be a lot of people that do get burned and they will swear it off forever, and I don't want you guys to be that. I want you to be able to jump in, profit from the market, and when the bad times do come, that you're smart enough to get out, short the market, or at least sit on cash. I don't want you to get killed by the stock market when it decides that the party's over. If you enjoyed this video, please make sure to like, make sure to subscribe to it. It really helps me out a lot to continue to build my reach and to provide you with great content each and every week. I appreciate everything that you guys do. You're awesome. Let me know down in the comments below, what is your trading plan for the next week ahead? What are you going to be buying? What are you looking to keep holding on to, and what do you expect out of your current portfolio? Let me know down in the comments below. Thank you guys. God bless.